clear, to us at least it's very clear, that Twin Hills as a camp or as a system overall has a lot of legs still. We really do believe that we've got the dragon by the tail, and now we need to slay it. It's going to take a lot of drilling, and we're already gearing up for that.
Greetings and welcome back to Mining Stock Education. This is Bill Powers. I'm your host. And today we are going to be discussing a new gold discovery in Namibia just announced yesterday by Osino Resources. Osino, you might know, is a sponsor of this show. The company's website is osinoresources.com. Company trades on the TSXV under the ticker OSI and on the OTC in the States, currently under the ticker OSILF. There are 67.4 million shares outstanding, and the company's market cap in Canadian dollars sits at about 33 million. Perhaps you'll remember about a month ago when I was at the Sprott conference, I interviewed mining legend and entrepreneur Ross Beatty. I published that interview about a month ago. If you haven't listened to it, I would encourage you to do so. As part of that interview, Ross favorably discussed and affirmed Osino and Heye Daun, Osino's CEO and founder.
Osino is a good example of the things that I actually like and therefore invest in. So I've got a handful of investments like Osino. But the very first thing that Osino impressed me with is the CEO. Like, Heye Daun is just a super guy. He's smart, he's pleasant, he's honest, he's hardworking. All of those things are really, really important. And he's got lots of experience in the area that not a lot of other people know about. It's an underexplored area, Namibia. Heye lives there. He just lives and breathes and dreams that region. So he's smart, he's experienced. Like, it's really hard to beat that formula.
Well, today you're not just going to hear about Heye, but you're going to hear from him as he discusses the significance of the drill results, 3 core holes that were released yesterday by the company. So with that being said, Heye, welcome to the Mining Stock Education Podcast.
Great. Thanks, Bill. Thanks for having me.
All right. So to properly understand these drill results, we need to set it in context. So before we talk about the drill results specifically, I would like you to begin to set the context. Specifically, when we talked several months ago over the phone, we had an hour conversation, so the listener knows. You kind of set my expectation for what would be success for the drill program. And so when I saw the results come out yesterday, based on my previous conversation with you, I was very excited. Talk about the simple business plan that you had when you launched Osino, and why specifically did you focus on the Karibib trend in central Namibia?
Okay, thanks, Bill. I'll try my best. So the business plan was sort of 2 or 3 steps. The first one was consolidation, i.e. put a sizable package together, something that has scale just on the map, and that gets noticed by majors and Matthias. But not just scale on the map, but also geological scale. So, having these pieces in the right places, geologically speaking. We've done the first step, we've done the second step, and the third, and I'll add a fourth step, is to now prove that we have something real over there, and then to find a big brother. And I guess we are somewhere along step 3 on the way to step 4.
Yes, so the exit plan, as you articulated it to me when we first spoke, was you plan on developing, defining, and then selling this project, not bringing it into production yourself.
Yes, I would say so, although I wouldn't exclude anything. We have to decide when that time arises. But in principle, I do believe in that approach. I think there are other companies and entities that are better at building mines than us, even though I've done it before. But our key strength is to be entrepreneurial, to raise money, to be flexible, nimble, put these things together, find these things, and I think we're proving that, and that's our sweet spot. So that's what we're going to concentrate on. I think once it gets into construction of mines and stuff, there's a whole host of other risks that come into play, and I think it is appropriate at that time to consider a sales process. So yes, we are working towards that.
And you and the key leadership of Osino have done this twice in the last 7 years already.
Yes, once in Namibia. Your listeners will know that I'm a Namibian citizen, and we sold the Ecuador project to B2 Gold, and they built a very successful mine there. So that was great for us. Kind of set the scene, and it's our model really. We're trying to do that again. And then subsequently with Ecuador Gold and Copper, which was slightly different. It was also a development asset that got merged into a Ross Beatty company, but that was also absolutely key for us because it was my introduction to Ross Beatty and his group of investors and people.
Okay, so the geological setting in the Karibib trend in central Namibia, as you mentioned, you're a Namibia national, but why this specific geological setting?
Why here and now? Well, in Namibia, or anywhere in the world, you have to work with what you have, and the geology is there. So Namibia has the Damara orogenic belt. It's orogenic, implying it's structurally controlled, and that means that there's a certain exploration approach that you need to take, and it also means that there's certain areas where you need to look, and that's how we started off. So we try to consolidate significant ground in the prospective parts of this belt, which is what we've done.
But let's talk about some of the comparables that you're comparing your project and what you're looking at to determine success for your current projects. There's 2 gold mines nearby. Talk about those gold mines. What are the size and annual production rates?
Okay, well, I'll answer it slightly differently, but it's a great connection to your previous question. There's the Ecuador gold mine, which I've mentioned, which is owned by B2 Gold, and it produces around 170 to 200,000 ounces a year. It's highly profitable, very important mine to B2 Gold. That's in the northeast. And then on the other end of the trend is the Namibia gold mine, which is used to be owned by Anglo. It's got a long and distinguished history. It used to produce, or it produces a little bit less, mainly because it is limited by throughput capacity, and we are bookended by these 2 mines. So you asked me earlier why in this area. Well, clearly, even though we have good technical justification for being where we are, but there is neurology too. There are these 2 successful gold mines in Namibia, but they were always seen to be oddities. People didn't kind of look at Namibia as an emerging gold belt. It was kind of odd. Geologically, the model wasn't well understood. Now that has changed in the last few years, and so we've brought very strongly this orogenic approach, the structural approach, which has resulted in some good exploration success that we've been having.
Yes, so it was your new set of eyes with a different approach that has allowed you to even bring the project to the place it's at now.
Absolutely. That's actually what I'm the most proud about, because, where we've discovered Twin Hills and where we've made this very recent discovery, is 20 kilometers from a 6 to 8 million ounce existing mine that's been mining for 30 years, had exploration by the likes of Anglo and Gold Fields and others. And we've discovered this undercover. So I'm really proud of that. That's a real achievement. And as it goes worldwide, you know this, most significant gold deposits these days are discovered undercover because most of the stuff that's open has already been found. So there's certain techniques that we've adapted that are very important, that have resulted in this success.
So with the 2 nearby mines, what type of gold grades are being produced, and what type of widths of intersections are there?
So generally, as you know, we are in a sedimentary belt. So the type of deposit that we have is a hydrothermal deposit as opposed to epithermal. So generally, these deposits are known to be lower grade but have bigger scale. Epithermal typically is smaller, more veiny, higher grade, but less continuous. So these deposits lend themselves to big scale. I mean, Namibia has a historical resource of between 6 and 8 million ounces. That's 20 kilometers away from us. And Ecuador is also a multi-million ounce deposit. So that has been our target. You asked me about what sort of intersection width they have and what sort of grades. Generally, between 1 and 1.5 grams per ton resource grade, but the production grade is always higher because they employ selective mining, so there's an element of upgrading. So both of those mines produce at around 1.5 grams a ton. If you relate that back to the intersections we've just announced in this discovery, they are still, or the grades are still lower, but that's entirely okay because we haven't discovered the high grade shoots yet that usually form part of these systems, and we'll get there. But what's different, which is highly encouraging for us, is the fact that our intersections are so long, like 180 meters. I mean, the average intersection length at Ecuador is probably around 50 meters. So it's very significant, and I think especially technical groups who understand this will take note.
Yeah, Heye, what I recalled from our conversation months ago was that you told me, Bill, if you see in the first initial results about 50 meters of anything around a gram a ton or a little less, that would be considered success. And so when I saw you put out yesterday 104 meters at 0.7 grams per ton, 189 meters at 0.69 grams per ton, and 78 meters at 0.64 grams per ton, I knew that was success.
Yeah, I don't know if you're asking a question. Let me also comment, that's just the intersections for the central part of the system. I'm just reminding you and your listeners that we the Twin Hills system, the entire gold system is about 11 kilometers long, as expressed by its surface anomaly and by some bedrock targets that we've identified along this trend. Now, the drilling that we announced yesterday applies only to Twin Hills Central, so it's sort of the heart of the anomaly. But so Twin Hills Central in itself has significant potential, but so do the other targets along the rest of the trend. So I think it's clear, to us at least, it's very clear that Twin Hills as a camp or as a system overall has a lot of legs still. We really do believe that we've got the dragon by the tail, and now we need to slay it. It's going to take a lot of drilling, and we're already gearing up for that.
So you saw some high grades within your highest individual meter assays were 5.7 and 4.76 grams per ton, 3.08, 2.84, and 4.29 grams per ton over a meter. Could those results, could that potentially indicate a high-grade shoot nearby, or what type of widths and grade would you want to be seeing to determine if you've hit a high-grade shoot?
Those grades are likely a small, well, they may or may not be a high-grade shoot, but it doesn't really matter at this stage. The reason we included them in the press release is just to indicate to mostly the North American Canadian audience that this project has the potential for higher grades. Now, when you ask me what kind of high-grade shoot would we like to see, of course, as high as possible. But that's maybe wishful thinking. So we need to be realistic. So we're looking at analogs. For example, the Otjikoto mine, which is to the northeast, the B2 Gold mine, has some high-grade shoots that go significantly higher, up to 10 grams a ton, 5 grams a ton, 3 grams a ton. Basically, my low water mark here is I need to deliver a gold resource that has 1 million ounces plus at a resource grade of 1 to 1.5 grams per ton. If I can deliver that, then I think we could say that we have a potential mine. I think we're still a little, we're still some way off that, but certainly what we're seeing now indicates that that's very much possible, if not probable, that we're going to find that. What the actual grade of the shoots will be, we have no idea. I mean, it could be anything. But sorry, just to end off, and those shoots, we haven't, with this drilling, we didn't specifically target high-grade shoots. We understand that these deposits are structurally controlled. We are gaining a better and better understanding of the structure of this deposit, and as that happens, our targeting ability will improve. So the next steps certainly will include specifically targeting higher grade shoots, but that was not the intent of this initial drilling. Initial drilling was to just prove significant mineralization in general, and that we've achieved.
What type of assay results should investors expect from the company over the next few months, and what about a drill program for Q4?
So I'll ask the second question. Of course, I cannot predict assay results just because there's a geological endowment and I can't influence that. But I would certainly say that investors should expect similar results to these going forward, although the length of these intersections are quite exceptional. I think if we match them again, that would be, as I say, exceptional. But certainly they should be interspersed with higher grades. So I want to see some 2 grams, some 3 grams, some 4 grams in shorter intersection widths within a wider halo of low grades. So that will ultimately constitute a mineable resource. So that's to answer your question on the grades. Did you ask me about the program going forward?
And what I was also indicating, Heye, was there are some assay results pending, and what time frame should investors expect those to be released?
Yes, so the time frame is short, within the next 2 weeks to 3 months. And just to remind your listeners and you, we are doing different types of drilling. In the sort of integrated program that we're running, we're doing percussion drilling, RC drilling, and diamond drilling. The percussion drilling is there to prove up mineralization at bedrock, i.e. through the cover, and the RC and diamond drilling is to then convert that bedrock mineralization into real intercepts. So the results we just announced are the real intercepts. So we announced 3 out of 7, so another 4 are expected. There will be 1 hole hopefully in the next week or 2, and the remaining 3 holes will be middle of September. So that's for the diamond drilling, which will further confirm or enhance the current discovery already announced. In addition to that, there will be further bedrock percussion drill results, which will prove additional targets along the Twin Hills trend. So basically making the whole Twin Hills system better. Those are also expected in the next, let's give it 4 weeks. And then we are now already planning a follow-up drill program to do infill drilling, step-out drilling, extensions on strike, and also to look for high-grade shoots. Now that drilling will probably commence around about middle of September, after we've received all the current results, and the results will be incoming during October and November. So fairly constant stream of exciting news coming up basically until the end of the year.
This is exactly what mining stock speculators want to hear, what you're describing, but it takes cash to do it. So talk to us about the cash in the Treasury, your burn rate, and what it costs to drill in Namibia.
So we have about $4 million in the bank right now. We're going to spend $4.3 million this year, which is, if you go on our website presentation, that's the number that I always mentioned. Of course, around 3 of that has already been spent. So we got another $2 million to go between now and the end of the year, which enables us to conclude what I've just told you, which is a range of drilling between now and the end of the year. And then we'll end the year with about $2.5 million. So that is not a huge amount, but remember we're in Namibia and we've got a very significant exchange rate kicker, so we can do a lot of damage with $2 million. But having said that, that's not where I want to be. My ideal sweet spot is to do a significant additional premium financing in the foreseeable future, to cash us up so that we can rev up our program, because these results very clearly tell us we need to do a lot more drilling, even over and above what I've just told you. That's what we're planning to do. So I think I may have mentioned to you before on your other show or so, there are different ways of raising that money. Of course, the market is much more receptive these days. We've got very good shareholders who stand behind us. But also, I'm interested to talk to strategic investors, because I think for a company like ours, we have such a big land position, so many projects, a lot of stuff I haven't even mentioned to you or your listeners, which we advancing. All of that takes cash. So I would be quite happy with a strategic partner at the 10 to 20% level at this stage, and we are actively working on that. We're talking to a couple of entities who could come in and be the anchor for a significant premium follow-on financing.
And that, of course, will protect shareholders against dilution.
Yes, although in this regard, we are not a prospect generator. We own all of the projects that we have. There's always the risk of dilution because, of course, we need to raise equity and issue shares in order to keep going. That's what we've done so far. And because we have such a diversified portfolio of assets, there's quite a strong argument to be made that we could farm out some of those. Let's say the non-core ones we could farm out to others, and we will consider that going forward, but we still need to add a bit of value to what we have in order to make these projects real. So that would be one way of minimizing dilution. But at the same time, if you have success and you own your projects 100%, I argue that being as we are, which is 100% owners and operators of our projects, I think is a better place to be than if we were a prospect generator now, where we would be dependent on other people's drive and determination. So I'm quite happy where I am, but of course it does mean some dilution. But I think dilution doesn't have to be a dirty word. If the dilution happens at higher prices and you generate value that way, then I think it is more acceptable.
Let's talk about Namibia. I've had Brandon Monroe, the CEO of Bannerman Resources, on this show in the past, and we talked about Namibia as a mining jurisdiction. When I spoke with you on the phone for the first time, you referred to Namibia as the Switzerland of Africa, and you also compared it to Texas, which as an American I'm familiar with. Why do you use those two analogies?
Well, when we're looking at jurisdictions, I think there are a couple of things you need to take into account, but the key ones for a mining speculator or mining investor are riskiness and ease of doing business. So riskiness refers mainly to political risk, which is uncertainty, political uncertainty, change of regulations, maybe losing your licenses, that sort of stuff. In that regard, Namibia can easily be compared to Texas or Switzerland, even to some extent, in that mining regulations are very stable, have been very stable for a long time, and appear to continue to be stable going forward. Another important consideration is, of course, ease of doing business. Can you find services, goods and services? Can you access your sites, weather, and in that regard, Texas is probably a better comparable because, yes, Namibia is great. We don't even have snow. We can access our drill sites all year round. We have a weak currency at the moment, which is good because it keeps our costs down. As we raise our money in Canadian dollars, we get a lot more bang for our buck. So yes, I still maintain that Namibia is a great place to operate. We're very happy there. And it's definitely one of the top exploration jurisdictions or mining jurisdictions, I would say. Of course, I have to say there are always some issues. There are always some elements that could be improved, and we're working with the government to do so through the Namibian Chamber of Mines. But that's just in the normal course of business.
As you progress the company forward and you look external to the company, what would be some of the key things that would hinder your progress?
So, of course, sentiment. Externally speaking, I cannot influence that. To a large extent, we are dependent on, I guess, Mr. or President Xi and President Trump. What happens with the trade war and there are other commentators that can put that into perspective much better than I can. At the moment, we have positive sentiment and improving sentiment, and that's good for us. But ultimately, we are dependent on that sentiment, especially when it comes to financing, because financing is driven by share price driven by sentiment. So I would say that's a key outside factor. Internally, I guess, one of the things we will be working towards is this company is very intimately linked to me as a person, because I have track record in Namibia. I've done this before. I've raised money, sold companies, etc. So a lot of people associate Osino with me personally. But of course, there's a much bigger team around me. I'm not the one that makes the discoveries. I'm just the one that sets the strategy and raises the finance. But we are looking at, as we grow, strengthening the team. So I think that's important for a small company. I would say those are probably the key factors that investors need to consider.
As we conclude, Heye, is there any final thoughts that you'd like to share with the investors that are listening to us?
I'm excited. Thank you. We looking forward to the future. I'm going to Vancouver next week to the Metals Investors Forum, so I'll probably meet quite a few of your listeners over there. Thereafter, Beaver Creek, the week after, meeting a range of investors, brokers, mining companies. So I think the next 2 or 3 weeks are going to be good for us. And then, of course, the medium term, very excited to get going on the follow-on drill programs. And it's so much easier to have that or to project that excitement when you have conviction. And with these results, our conviction has just grown tremendously. So we're looking forward to the future. Thank you.
Company is Osino Resources. The website is OsinoResources.com. Make sure you head on over there, click your email in the box there, and you'll get the results, these drill results upcoming that we're talking about. You'll get those emailed to you the morning that they're released. Check the company out on the TSXV under the ticker OSI, on the OTC. OSILF. I'll be talking to Heye over the course of the next year, and as these results come out, he'll be a frequent guest on this show. Well, Heye, thanks for coming on Mining Stock Education. I look forward to meeting you in person in Beaver Creek.
Excellent. Thank you, Bill.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.